So guys, in this video I'm going to talk about swing trade confirmations. Now, those swing confirmations are basically another trading setups which you can use along with your main trading setups. The main trading setups are based on volumes, and the confirmation setups are usually based on something a little bit different. For my swing trading, I use confirmations from ABCD setup, from support becoming a resistance setup. Also, I look for higher time frames to look for confirmation on the higher time frames. And also, I look for VWAP. Now, in this video, I'm going to talk about the first three confirmations, and I'll cover the VWAP confirmations in a different section, which will be completely dedicated to VWAP. All right. One important thing about those confirmation setups: you don't need to look for them. You can trade the volume-based setups which I showed you alone without those confirmations. But if you are able to find a confirmation which confirms your volume-based trading setup, then the trading level is usually much stronger. The probability that the level would work is much higher. So that's why I use the confirmations to find the best trading levels. And also, if I'm sometimes not sure about some volume-based level, then if there is a confirmation of the level, then that is a green light for me and I take the trade. All right, so let's have a look at the confirmation setups. The first one is ABCD confirmation. I was already talking about this confirmation in the intraday trading section, so I'll just do a little recap of this one. Now in this picture, you can see bearish ABCD formation. Looks like this from point A to B to point C, which is below 50% of distance from A to B. There is the C, it goes to D. You use the Fibonacci tool. So the distance from A to B is the same as the C to D. And from place where the D is, you go short. You can see that on the picture, right? So there is a point A. This is this swing point. This is swing point B. This is distance A, B. Below 50% of the AB is the C. And the same distance as from A to B is from C to D. This is how you discover the D. And from D you go short. All right, like in this picture. Now this is a bullish ABCD formation. It is the same, only reversed. A, B, C, D. From D, you go long. All right, so if you look at the picture, here's the point A. You go to B. C is above 50% of the AB distance, but it shouldn't be above the A. All right, so it needs to be below the A. So here is the C, and the same distance as from A to B is from C to D. And this is the level to go long from. All right, so that's the ABCD setup. It's a confirmation setup. You can also trade it as a standalone setup. I don't usually do that. I use it only as a confirmation to my volume-based levels. Like in this case, there was a volume accumulation setup. There was a rotation, which was followed by strong buying activity. By the way, this is a daily chart on the crude oil futures. And heaviest volumes were right there. And this would be your place to go long from. If you wanted some confirmation, then in this case there was a nice confirmation of the ABCD setup. This is swing point A. From there it went to swing point B. Then the price went to swing point C, which is above the 50%. As you can see in here, this is a 50% line. It's above it. And the same distance as from A to B is from C to D. And this is the confirmation of the level. All right, confirmation is the ABCD setup. It confirms the same level as the volume-based setup, which is in here. All right, when there is confluence like that, the level is usually a pretty strong one. Now let me show you another example. There was also volume accumulation in here. In this case, this is the eBay stock daily chart. This is a volume accumulation setup right there. Heavy volumes from which strong buying activity starts. Heaviest volumes within this rotation were right there, so this is the long level. And the confirmation of the level is right there. A, B, C above 50%, and the same distance as from A to B is from C to D. As you can see, I used the Fibonacci tool. This is a built-in tool. You just press F8 button on your keyboard and the Fibonacci tool will pop up and you'll be able to use it. You always use it for swing points like those, all right? Significant swing points. So here is the D, a little bit above our level, but it's good enough for the confirmation. Usually the setups don't align exactly at the same price level. Usually there's some distance between the levels, but the important thing is that it shows that this zone around the level is a significant zone because there is the D, all right, in this zone. So it doesn't need to be exactly at the level. It is enough for me to see that in this general area around this volume-based level. Now in here, there is another example of the ABCD confirmation. First, there was a rejection of higher prices, and within this rejection, there was heavy volume cluster right there, with heaviest volumes exactly in here where I draw the line. So this would be the entry point for the swing short. By the way, this is the US dollar Swiss franc daily chart. So this would be the short based on the rejection setup. And as a confirmation of this level, there's also the ABCD setup. This swing point is the point A. From there it goes to swing point B. It's not visible in the picture, but the wick of the candle, of this red candle, ends in here, all right? So this is the point B. From there it goes to C, which is below the 50% of the AB distance, but not below the A. And from there you measure the same distance with the Fibonacci tool and it will go to D. In this case, the point D shows right there and our level is in here. And as you can see, the price actually reacted to the ABCD setup. It actually reacted right there. So the price went a little bit past the level, which was based on the rejection setup, and then reacted to this level, and the price went into a sell-off. Also, in case like this one, I consider this level a confirmation of this zone, of this resistance zone. All right, as in the previous case, it doesn't need to be exactly at the level, but if it's near, then it's good enough. All right, so that's for the ABCD confirmation. You won't see confirmation like this that often, so it's a bit rare, but when you find it, when you find volume profile level combined with ABCD level, then it is a very strong level to trade from. All right, so let's go into another swing trade confirmation which you can use. I really like when I see this one. It's a support becoming resistance and vice versa, meaning resistance becoming support. I already talked about this, but let me do a little recap. So imagine that this is the price development. Price reacts to some trading level in the past. This is the trading level, all right, this red line. And when the price bounces off that line like this, then you can tell that it is a strong resistance. When the price goes past it, then the resistance becomes a support. And when the price gets near the support again, then the price will bounce off this support like this. Alright, so this is resistance becoming support setup. I use this confirmation for intraday trading as well as for swing trading. Now, the reversed scenario would be price reacting to some support level like this. This is a support level. And when the price goes past the support level, then the support level becomes a resistance level. Alright, so when the price makes it back to the level again, you expect a reaction like this. Alright, so this is the support becoming resistance. Now let me show you some examples. This is a real trade example of a trade which I took and which I'm still currently in. It is a short on the euro-dollar, which I entered in 2017. I'm still in a trade, it's like 1.5 years. And as you can see, there was a strong selling activity in here. And within this selling activity, there was the trend setup right there. Significant volume cluster created within the trend. So this would be the place to go short from. But in this case, I really needed some confirmation. By the way, this is euro-dollar weekly chart. All right, so the confirmation are those rejections of this general zone, which I marked in yellow. This means that it was a strong support because the price bounced aggressively off that zone many times in the past. And in here, the price went past this support, which means that the support became a resistance. So that's the confirmation which I needed to enter my short somewhere from this area. Alright, support becoming a resistance confirmation. Now let's have a look at another example. This one is on eBay. It's eBay stock daily chart. In here there was a trend setup, strong buying activity driving price upwards. So I used the flexible volume profile over this area to see if there was some volume cluster. It was in here. So this was a long level. But I also wanted to see some confirmation of the level. Right there. And right there. Nice reactions to this general zone, meaning that this was a strong resistance, and when the price went past the resistance, it became a support. So what I have in here is a trend setup based on volumes, and as a confirmation of that, resistance becoming support setup at this level. And this is the reaction. Alright, you wait for pullback, you go long from there. One more example of the support becoming resistance setup. In this case, it is resistance becoming support setup. So in here, this is again eBay daily chart. There was a strong uptrend. Within this uptrend, there was a really significant volume cluster right there. So again, this is the trend setup. With this setup, you wait for pullback. And this is the place you want to go long from. This line where the volumes were the heaviest, all right, within the volume cluster. Now the confirmation in here is this rejection of this level in the past, also this smaller rejection of this level in the past. This means that it was a strong resistance, and when the price went past this resistance in here, then the resistance became a support. Alright, so when the price went back to the level, we have a support here based on resistance becoming support setup, and also based on the trend setup. Alright, so that's the confirmation. Two trading setups telling you the same to go long from there. Now what I also use in my swing trading is that I use yearly profiles to see the big picture, to see if there is some big confluence from a bigger picture. This is a yearly volume profile, which automatically prints volume profile over a whole year. This is Australian dollar Swiss franc chart. This is a daily time frame. And in here, there was a volume accumulation setup. Heavy volumes accumulated before strong sell-off. So this is the level to go short from, but that's not all. If you look at the yearly profile, then you notice that the yearly point of control is at this area. This is the yearly point of control. Heaviest volumes throughout the whole year got accumulated there. And this is the confirmation of the level, because this would be just a standard level if you look at it like this way, alright? But if you notice that there is actually the yearly point of control, then this is very strong confirmation of the level, because yearly point of control is one of the strongest levels you will see on any chart. Alright, combine those two and you have a very strong level. You can see how aggressively the price reacted to it, how fast the sell-off was after the price hit this level. Alright, so always look on the higher time frames. With swing trades, I suggest that you use the yearly volume profile, like in here, which will show you the most important zones. Now, you don't really need to trade only from the yearly point of control. You can also watch for other significant volume zones on the yearly profile. So let me show you some more examples of this. Well, in this example, there's also the yearly point of control, but the next one will be different. All right. So in this case, what we have in here is a crude oil chart. Again, it's a daily chart, and there was a rejection of lower prices and start of aggressive buying activity. So heaviest volumes within the rejection were right there. This is the rejection setup. This would be the level to go long from. Now, the confirmation in this case is the yearly profile. Now, if you look at it, that's the yearly profile. This is how it looked like when the price was getting back to the level. This is not the profile for the whole year because it was still developing. It's only 5 months of profile actually, but it's developing yearly profile, all right? And the point of control of this profile is in here, exactly at the level, confirming the level. Yearly point of control along with this volume-based level we have in here. All right, so that's nice confluence of this volume-based level and the yearly point of control. So, for example, if you weren't sure whether to take this long right there or not, then if you noticed the yearly profile and saw that there was a yearly point of control, then I think that you would feel much more confident trading this level if you knew that it was a yearly point of control. Trading with those confluences gives you much more confidence in your trading. Now, this is the last example. It is a crude oil chart, daily time frame, and in here there was a trend setup. Price was going upwards aggressively, and within this upwards movement there was a volume cluster in here, and from those volume clusters we want to take pullbacks like this one, like in here. All right. Now, if you look at the yearly profile, you can see that as it was developing, there was a significant volume zone right there, exactly at our level. It was not the point of control. The point of control was in here. By the way, there was a nice reaction to the point of control. But the thing I wanted to say is that you don't need to watch for point of control only, but also for very significant zones, which you can spot right on the yearly profile. There is such a zone right here, or for example, also in here, and of course, this is the point of control. All right, those are significant zones. One of them is confirming our level, which gives you much more confidence when trading it. Alright, so that's about it. That's about the confirmations. Always look for those. The more confirmations and confluences you can find to your trading level, the better. Alright, so that's about this video, and I'll see you in the next one.